Ladies and gents, we're going to take a look at Blink charging, okay? You know, it's one of my old positions, and there's a couple of reasons for that. We'll probably get into it today. But they just reported earnings down 9%. It was a little bit worse earlier. Earlier, we saw around a 13% decline, so right now it's only around a 9% decline. Let's take a look at 9.5 now. It's trading pretty volatile, let's be fair. But let's take a look at these earnings and see what exactly is going on and why we might be seeing a little bit of a downward movement for this stock. So definitely a hot stock when you talk about the fact that it's focused on electric charging. Pretty big because really it's an industry that's flourishing as is. And obviously you want to be in an industry that is flourishing. It's just kind of the way to do investments, and that's why you've seen such a big rise lately. If you look year to date, I mean, this is incredible stuff. I was definitely a part of some of this journey, up 440% this year so far, which is pretty massive numbers. So let's look at these earnings and see what we have to offer. Blink charging. So a Q3 GAAP EPS of negative 12 cents is a miss by 2 cents. Not horrific numbers. If you're talking about profitability, it is a miss, but the numbers aren't horrific there. I've seen a lot worse, so I'm curious. We'll look at what that equates to as far as a net dollar loss. And a revenue of 0.9 million increases 18% year over year, which is a miss by 0.73. That's quite the miss. It's quite the miss, and I can't lie to you. It's quite the miss. I mean, only to see an 18% rise it's somewhat disappointing out of a stock that's trading at such a ridiculously high multiple right now. The valuation's it's very bloated on this stock, which is again why I sold out. To see revenue increase by such a small amount, it's not encouraging to see that it deserves that valuation, because this means it'll take a long time before that valuation is somewhat justified. So that's my fear of it. Yeah, that's my philosophy on the matter. It's an ugly miss. I can't lie. But we'll still look at the press release and see. Let's find some of the good news here. As far as the selected highlights, we have a total revenue in the first 9 months grew 84% to $3.8 million. I need to mention that. I mean, this is probably a company this year. It'll probably put up probably less than $5 million. And my concern is that it's trading at a $331 million market cap, not even making $5 million in revenue in a year. I mean, that is a multiple the likes of which I've never seen. I've seen it, I'm just kidding, but it's quite an incredible multiple. You're talking about right around 65 times the revenue almost. Kind of scary stuff to see a multiple that high for a company that's really only rising 18% year over year this quarter. Pretty crazy. But the overall guidance, or the full last year, they only put up 2.8 million. So this year they've already done 3.8. Still have a quarter to go, so there's a benefit there. 668 EV charging stations were sold, deployed, and acquired across 25 states. Product sales in the quarter grew 74% to 0.6 million as compared to the prior year quarter, related primarily to an increased demand for the company's commercial and residential products. So again, selling more chargers is pretty significant too, because they benefit a lot from that. Net loss was 3.9 million. I don't like that, and I think you can understand from my perspective why I don't like that. This quarter they had a net loss of 3.9 million. Yet they brought in $0.9 million in revenue. I mean, I don't know what else you want me to say, but they lost 4 times the amount of money that they did in terms of revenue. It's a concern. It is an absolute concern from my perspective, and that's kind of why I sold out of this thing, because I just don't know. Yeah, not a huge fan. That's compared to a net loss of $2.6 million in the third quarter of 2019. Increasing loss is not what you want to see for a company like this, because it's pretty much forcing them to raise capital if they want to possibly survive what's going on, because it's looking kind of ugly. And I'm not saying I don't want to bash on the company, because I don't think it's necessarily something that's not going to work out. That's just why I sold, was I think there was a little bit too much risk in it for me, because I don't know if they're necessarily going to be able to pull that off. With really a lot of the other companies that might be selling their own EV charging stations, I don't necessarily know if Blink's going to be one of their partners. That's the concern, is are they going to go with their own brand, or are they going to go with Blink? Who knows? But as far as during the third quarter, the company acquired Blue LA car sharing with 200 EV charging stations in downtown LA. They signed an agreement with Cushman and Wakefield for marketing of Blink EV charging stations to that firm's U.S. clients. An interoperability agreement with SemaConnect, allowing customers of both companies to roam between charging networks without needing additional accounts or cards. Pretty cool there, I guess. Launched an upgrade program for existing host-owned Blink EV charging stations to transition from the first-gen equipment to the fast 2IQ 200 charging stations, the more equipped and advanced equipment, I should say. Pretty good stuff. Yeah, pretty nice stuff as far as that's concerned. So they do have some good announcements. I mean, I don't know. It's tough to say. I'm really gonna try to see if I can get these financials. I'm very curious on the balance sheet, and this is obviously a company that's relatively hiding. The balance sheet will look just a smidgen longer to try to find this balance sheet, as we want to do. Let's look at the financial info tab. Balance sheet. They only given me the June one. I don't like that they haven't updated it quite yet, but it's okay. We'll go off the June one, because we can kind of see if you add a $3.9 billion or $3.9 million loss, what you might get. So total cash on hand is really only at this point $3.8 million. Somewhat concerning, because again they lost $3.9 million this quarter alone. Current total current assets, this line here of it's declining pretty rapidly, 7.9 million versus 10.1 million in December. So 6 months passed and they lost $2 million. They lost another 3.9. So I'm curious what that looks like on the balance sheet, if they want to post that for me. Total assets in general went from 11.9 to 10.9, so not as bad there. Current liabilities, total current liabilities, you're seeing 4.9 million number. Probably has gone up since then compared to a 4.3. So I mean, it's not total liabilities of 5.5 versus 4.5. It's probably gone up again. So you're gonna see stockholder equity shrink even more. Right now, stockholder equities as of June was sitting at 5.4 compared to 7.4 6 months prior. It's probably sitting closer to a $3 million to $3.5 million stockholder equity at this point. Probably closer to 3.5. It's probably closer to 4. Let's be fair. And I think that's a concern. This balance sheet shrinking rather quickly, because they can't afford what they're doing right now, unfortunately. that's my concern. This is a company that's desperately in need of either a buyout or they're going to need to raise capital and increase debt quite a bit. That's why I sold out of this thing, and I think that's why some investors are pulling back here. I said if it's under a $7 level, I would consider it again, but for now, I just don't like the valuation on it, and I'll still be avoiding it. So overall, hope you enjoyed and you have a good one.